Trading has been stopped on Wall Street this morning after a huge drop in early trading.
That's right. The Dow Jones Industrial Average fell 7% right after the opening bell. Other indices were down as well.
CBS News business analyst Jill Schlesinger is with us. Jill, what's going on here?
This really started as an oil market problem. Through Friday's close, crude oil down 30%. Over the weekend, Saudi Arabia and Russia were meeting to try to curtail production, keep prices a little higher. Those talks just fell apart. Saudi Arabia is now flooding the market with oil. Oil prices down by more than 22% this morning. That's dragging down the entire energy complex. Of course, this is all about the coronavirus and the fear of the economic impact felt throughout the world.
When people hear that trading has stopped, that sounds really bad. But what's the point of these stoppages?
Well, after the 1987 crash, there was the thought that if we had a moment to take a timeout, a 15-minute break, that would kind of soothe the nerves of investors. So these circuit breakers or trading halts occur at specific levels. When we're down by more than 7% from the previous close, then again, when we're down 13%, there could be another 15-minute break. And then if we're down by 20% in one day, which the last time that happened was in 1987, then we stop trading for the rest of the session.
So we resume in about 8 minutes here trading. What do you expect to happen then?
I think that the problem is that selling begets selling. And you'll hear people talk about electronic trading, algorithmic trading. But this is just plain old fear. This is people getting so freaked out about not being able to understand the economic impact of the virus, especially here in the United States, that they are just selling everything and getting out of the way.
Two things. One, is this a bona fide crisis for President Trump? And two, how does it compare to what President Obama walked into?
Well, let me deal with the second question. We are actually in a very interesting moment. It is 11 years ago today that the stock market bottomed out after the financial crisis. In that crisis, we were down by more than half across the board, and it was a real scary financial crisis. This does not have that same type of character. This is a crisis that is likely going to be short-lived because we know that the virus has already started to recede a bit in China. I think the problem is that until you feel like someone's got control, that the markets tend to be the quickest reaction point. Look, if I'm worried about my health, I'm worried about my money, the only thing I can really do is just sell. That's an easy place to put my emotions.
Yeah, and the uncertainty is, at the moment, we don't really see a time limit on this. That's part of the problem.
Right. And I think that when you look at economic growth here in the United States, we have to also remember we came into this period very strong. We actually had an economy that was growing by more than 2% in the 11th year of a recovery. We just had a jobs report on Friday that was very good. 273,000 jobs created in the month of February. So thankfully, we're actually in a good place to weather this compared to some of the European nations. Like Italy was already weakened, the 8th largest economy in the world. So I think that we're going to have to see some more direction. And hopefully for those folks who are really worried, you remember, be a long-term investor. Try not to be reactive.
Hold the line if you can.
Yeah, good to hear hope on the horizon. Thank you, Jill.